Good morning. You're watching The Market right here in 18 Hour with me, Aisha Faridi, Nikunj Dalmia, Avan Bash in the studios. And it's been tempered and sedate all across the global screen yesterday. Not just we consolidated, but as did the globe as well. You can see on your screens the kind of cues that we were handed down. Just a very meager 60-odd point kind of move coming in for the Dow. Similar was the picture all across. S&P, of course, held out smartly, as did the Nasdaq. But even Asia is just very, very lackluster this morning. In fact, markets like Japan, Hong Kong are in fact seeing some bit of red also on their screens. And so did we. Consolidation, and a healthy one at that yesterday.
Aisha, look at yesterday's price action only in isolation. Thursday ko kya hua? Okay, it was not very impressive. I look at this week, this has been a record week. I look at the month of December, impressive. But the minute I look at market from October low, I think it's been a record-making comeback. So you really have to understand that what kind of time frame you're looking at. You take a magnifying glass and okay, you say Thursday. Yesterday was not very impressive. The market was showing signs of pause and the flows were not that great. But in general, I guess this has just been more than a dream run even for best of the bulls. None of the bearish narrative has made any sense. You've just stayed with the market, if you've just kept the faith going, both locally and globally, I guess markets have really obliged everybody. So the setup, I think, is very simple, that globally and locally markets are consolidating. They could consolidate for maybe few days more, but directionally and both in terms of momentum, I guess markets are poised to go higher. My advice really would be, or my suggestion here really would be, that don't get into this myopic attitude of assuming that markets, even in best of the bull run, markets will move up on a daily basis. If markets they consolidate for next couple of days also, I think that would lead to some base building. Yeah. And that base building, I think, is actually very, very healthy. Otherwise, the pace of the rally has been nothing short of staggering and scorching. Yeah,
but the global setup as well seems fine. Crude under control, 10-year yield US as well, pretty sedate.
Yeah, that is the interesting bit, Aisha, that as of today, the big surprise I think has come from the US bond market and the global bond market. It's not only the US 10-year paper, it's also crude and it is also the Japanese yields, even local yields also. The yields have come down. And that could be an indication of whether there is a recession coming in 2024, or that is a clear indication that now it would be really difficult to construct a scenario that US bond yields will go back to 5% in a hurry. If that is the scenario, then obviously it means that flows will start diverging back into Indian markets. So I look at the crack in bond yields from two perspectives. One, what it means for flows in the short term, and is this an early sign of that some trouble is coming in 2024? I would say we'll talk about 2024 when it happens, but in the near term, because the bond yields have picked, 5 has become 4 or 5.1 has become 4.1, it is a clear indication that things now, at least on the flow front, will get better.
Okay, yes indeed. So looking at a pretty stellar setup right now, take all the parameters into account and things are looking strong and we're set for the best week. By the way, in the last 3 years, that's the impact of the geopolitics that we've seen on asset classes as well. And you've seen the 10-year yield, the dollar index, all of that, that hasn't been too impacted. The Nifty Bank as well set to see its best week in a year. But that aside, today the talking point is going to be the RBI policy. And Nikunj, this is something that you've been alluding to as well, that the kind of setup that we have at hand, the RBI governor has his decision pretty much laid out for him.
Yeah, I mean, we spoke about the fact that 2 credit policy ago, he had to bring the cannons out.
Yeah.
And I think the cannons are back in the barracks now.
Yeah.
We can argue back and say that the war on inflation is not over yet, because seasonality in terms of tomato prices, vegetable prices have started going up. So I don't think in this kind of an environment, any central bank governor will come out and say that, we won the war against inflation. Reserve Bank of India is, the inflation print, even though it's come down, it is still above what the RBI comfort point is. So of course you've not won the war against inflation, but the GDP print, what the general mood point is in terms of where the economy is headed, where global cues are, how crude in a sense has been a tailwind, geopolitical tensions, if they were the eye of the storm, so to speak, they've not really impacted asset prices. So I think Reserve Bank of India, I think the tone and tonality is not going to be dovish, it's going to be hawkish only. They would mention that the inflation concerns cannot be ruled out completely. I don't expect them to come out with something very big in terms of a rate communication. But what you would want to hear from them is that what is happening to this entire unsecured loan space. I mean, why has Reserve Bank of India come out and put out measures to curb the growth of that segment? And RBI has two jobs. One, manage inflation, and second, ensure growth does not get dampened. If growth of a particular category is also exploding, they have to come out with risk management. So do they have access to data, which surely they have, where they feel that the unsecured loan category in a sense is reaching what could be called as high risk level? You have to hear from Reserve Bank of India. You've not heard from the governor after the announcements happened. So I think a lot of attention would be centered around that also.
Yeah, absolutely. The commentary is going to be key. But here's Auradeep Nandi from Namura. He believes that the governor is likely to stay hawkish and would look at tightening liquidity.
Language going to be, especially on liquidity, because a lot of the tightening seems to be delivered through that route. And there, I think, the last policy, the governor announced possible OMO sales, and that sort of set that among the pigeons in the bond market. And then over the past couple of months, we've actually not seen a liquidity situation that has warranted that intervention from the RBI. So one of the things that markets are going to be watching out really carefully is the language around liquidity. So I really don't think that the governor would give a dovish bias to any of this. He would like to remain hawkish. He would like to say that, look, I am still looking at tight liquidity. And to a great extent, I think it would be continuing with the kind of hawkishness that we've seen in the past couple of meetings, despite a pause in rates.
Well, sectorally, while the market was pretty split and divided, yes, the power names were powering ahead. What with the move coming in on a Tata Power, on a power grid, the entire space was struggling along very nicely. And of course, NTPC. The other one, which had sort of news flow impacting its moves, was sugar on the other side. What a volatile ride. Started off in the red, saw a recovery, and then again petered down. And the news flow still seems a little bit grey right now, because Nikunj, companies cannot use sugarcane juice or syrup for ethanol with immediate effect, and there still needs to be some clarity on production.
Sasha, our understanding is that the real impact on ethanol production is not going to be very large. But really from a market standpoint, this in a sense is again where government policy intervention has kicked in. I mean, this is one sector which in a sense the government had always made the ethanol consumption as really one of their pet projects. And the success in a sense has been so smooth, where at a ground level, at a real level, ethanol production had started, the blending has been a great success, companies have invested into it, long-term contracts have been signed. First it started with grain, then it's come to sugar. Now you can argue back and say that, okay, this is, nothing changes till 31st of March, and if sugar prices, they stabilize, then another notification could come in. So the net impact per se is not going to be very large. But the premium, let's say this entire supply chain was commanding, starting from in Praj to grain manufacturing, ethanol companies to sugar companies, that just becomes a question mark. What if sugar prices go higher? What if something goes wrong on a global level? I mean, could they be treated like oil marketing companies have been treated, where irrespective of what the policy terrain is, prices actually determined the underlying policy.
Yeah, in fact, let's take this discussion forward. We have Prashant Bayani joining in right now from Elara Securities. Prashant, hi, morning. Thanks for taking the time out. Prashant, sugar companies cannot use sugarcane juice or syrup for ethanol with immediate effect, which means mills will have to resort to B-heavy or C-heavy molasses or ethanol production. What about the contracts already signed for supply using sugar juice?
So the contracts which have been signed will now be lapsed with immediate effect for juice-based ethanol, with the caveat that whatever is the existing stock lying with the sugar companies, that might be taken up by the OMCs, but production needs to stop immediately for juice ethanol. For B heavy ethanol, till the time we have the existing contracts, till then supplies of B heavy ethanol will continue. And post that, for subsequent tenders, it will only be C heavy ethanol, which OMCs will take.
What's the margin differential then between ethanol made from sugarcane, B-heavy and C-heavy molasses?
Yeah, so juice ethanol, even though volumes are higher for juice ethanol, margins are lower by around 50% vis-a-vis B and C molasses-based ethanol, and that is because there is no sugar production when you are making juice ethanol. So entire cane cost gets built onto the ethanol only. So in a way, even though ethanol volumes are going to take a hit for sugar companies, but margins may not be that impacted as it would be on the top line.
So,
And so for maybe B and C heavy ethanol, the margins could be between 27 to 30%. For juice ethanol, it will be around 15 to 20%.
so could this be more like a storm in a teacup, and one should be buying sugar stocks if they fall now?
I won't say one should be aggressively buying it, but yeah, we don't expect any further fall from here, because especially on the larger ones, the impact could be limited to the extent of maybe 15% on EBITDA and PAT over the next 12 to 18 months. But due to other events like sugarcane SAP being due for revision, and some amount of sentiment being negative around ethanol, I won't suggest to buy sugar companies as of now.
And if the notification extends itself, let's say post April also, then what happens to sugar companies? What happens to ethanol as a supply chain?
So juice ethanol itself you can make only till the time crushing happens, and which anyways ends around April or May 15th. So that will not have an impact beyond April. It will not have a material impact even if the this ban on juice ethanol continues beyond April.
Good to have you. Thanks so much for providing us that clarity. It certainly has been the cynosure of all eyes, the way the sugar stocks have been performing, particularly yesterday and in the past week. But let's connect with our chartist to find out what the road ahead implies for the markets. We've got Naresh Mirani joining in on the charts. Naresh, we've got a pretty stellar setup, given that you've got the rally, which has taken a little a breather. Is this a sense that it is only going to continue? It's just a bit of a pause and the undertone of the market looks strong.
So yesterday Nifty did not make a move, but most of the other indices, whether it is the Nifty small cap 100, the mid cap 100, made new all-time highs as well. So clearly the broader market is pretty positive. Over the last 3-4 sessions, we had seen Nifty outperform the rest of the benchmark. So overall, we are still in the trend, a little overbought. But what we've seen is when it is overbought, it does not correct very quickly. We can take a pause, make a few highs, then make a negative divergence. So we are still in the very initial parts of being overbought. Going forward, 20,500 becomes a support, which is where we saw a big gap up from. And 21,200 is the upside resistance where one should be looking to book partial profits again. So overall, we could see some more stock-specific action. Structurally, Bank Nifty continues to remain interesting given that it's given a fresh breakout. And a lot of heavyweights in the banking space have actually come to new all-time highs and are near fresh breakouts. So something like a SBI is back to that 600, 620 mark, which has been a problem zone. You have ICICI Bank closer to 1,000 again. So a lot of these names actually are looking at as a breakout stocks, which could do well over the short to medium term. So the bias remains positive. It remains a buy on dips market.
Okay, let's also get in those top recommendations then. Nuresh, what is looking good on the charts?
So looking at the stock side, the first is a recommendation on Voltas. The stock has been consolidating for quite some time. So keeping a target price of closer to 930 levels, 920 and a stop loss at 855. Then next is the buy on IGL, Indra Gas, which has seen a sharp correction over the last, 3 months, and now is making a base around that 400 mark. So it's a bounce back trade with a target price of 440 and a stop loss at 400.
Or Kunal Bothra as well, who's joining in on the charts. And Kunal, what about your view, in particular on the Nifty Bank? Because we've seen a pretty stellar week gone by. What levels are you tracking on the Nifty Bank index?
So I think now we are at a point where 47,000 mark, which is a round figure number, could probably act as a pivot for the index. These are generally points where the index take a bit of a pause because there is a lot of juggle between the option writing positioning, especially at the round strikes, say plus minus 500 points, become the hub for call writers and put writers respectively on the higher and the lower side. So I believe 47,500 on the upside and 46,500 could act as the ranges for Bank Nifty, and I believe that's where one should probably try to concentrate in case if there is kind of an intraday dip or a short-term correction towards 46,500 mark, should be taken as an opportunity to buy.
Let's find out what strategies you're adopting when it comes to individual stocks, Kunal.
So I'll go with stock-specific breakouts. There are two breakouts which have been very fresh in the markets yesterday. IEX is the first one. The stock has confirmed a double bottom breakout, breaking past about that 150 barrier, which was a major resistance for the stock over the near term. So would suggest a buy with 175 as a target. Stop loss could be kept at 152. And the second is a buy on Laurus Lab. Even this stock yesterday gave a breakout. It was a minor swing pattern breakout on the hourly charts, expecting a strong up move for the stock over the very near term. 410 as a target, stop us at 380.
Well, just taking a leaf from some of those pharma names. Orchid Pharma, Anisha is here to flag off the stocks to watch today. Anisha, and a coverage initiation coming in from one of the brokerages. What's the rationale here?
Yeah, so this is one company which has not been very well tracked. So this comes in as a good surprise that there is a formal initiation by one of the brokerage houses, and that's Investec, which has started the coverage with a positive rating on this one, a buy stance, and the target price stands at rupees, which is a good 40% higher than the current market price. Now they believe this could be one of the turnaround stories. We have seen that the new management had come on board. And that is something which is expected to change the course of the company in the next 3 years, they believe, because they're expecting strong growth to come by. They're also talking about how over the past 3 years we've already seen tripling of EBITDA and the deleveraging efforts in the company, and going forward they're likely to strengthen their position as a CEF API market positioning. So that's something to watch out for. In terms of the expectation, they're expecting a strong 35% growth in terms of EBITDA going forward. They are also liking the pipeline which is there in terms of the company going forward, and overall they believe that this could be pushed into a new orbit per se. Nikunj Pharma of course has come back into flavor, but for now it has been limited to, let's say, the large cap pharma names and the frontline names per se. Do you think it's time now to look at some of these niche names as well?
You know, Nisha, I've just read the report you've referred to, and sometimes you don't know. In this case, sometimes you have to say that, I don't know. I mean, I was thinking that I'll be ready with some notes by the time we put it on air. No, see, Orchid was on the radar, and then the company, changed gears, and the promotership issue happened, and then that issue happened. They do have some product pipeline where, if the entire supply chain, gets better, I think they are likely to be having a huge impact because of that. But by and large, I think you'll have to refer to the report because I'll have to confess ignorance on this one.
Well, that's what
did not do my homework.
Investec also figured, and that's why the report
I did not do my homework on this one.
But Paytm, that got really slashed. What's the street saying
Therefore,
now?
that I don't need to see my notes.
No ignorance being feigned there, yeah.
Yeah, I know, and it's been a very interesting tale. Remember those IPO came in 2021 November, I think, when it was listed at around that 2,000 rupee mark, and since then it's been just one way down for the counter. Yesterday, of course, it took a knock of almost 20%. 660, but then there was this debate, at what level does it become a buy? Because even if you look at the downgrades that came yesterday as well, The target prices were slashed, but the target price was still in the range of 800 to 900 rupees, which means there's value on the table. Nikunj, would you concur with the view that there should be some buying on dips, or do you think today will be another day that the stock will see further dropping?
So, Nisha, when the core proposition of your business model or one pillar of your business, in a sense, looks slightly shaky, then markets will take some time to really, digest that move. Now, while Paytm has ticked all the right boxes in terms of committing to cash profitability, they are capital conscious focused, they are not really expanding left, right and center, and they've built up a very formidable, what could be called as a, lending business. The challenge with that lending business is that's a business which now is on the regulator's radar, and that's a business where they really want things to slow down. The MTR spreads, what Paytm has actually enjoyed in that business, I think is fantastic. Now, if that business proposition changes, that automatically will lead to earnings downgrade, anywhere between 3 to 15, 3 to about 12%. That's a broad consensus. Now, this is a stock which in a sense is still dominated by institutional investors. It's a stock which is still very expensive. And when you typically see that there is going to be reorientation for next couple of quarters, then the earning estimates will get slashed. So it's a high beta stock. It's a stock which had seen a deep swell from levels of 500 rupees to levels of about 900 rupees. Yesterday, a lot of stock was marked as delivery. So even though you may say that okay, the consensus price target is somewhere close to 800, but in the decline also for Paytm, Anisha, brokerages never slashed their targets vehemently excepting Macquarie. So Paytm actually fell from 2000 to levels of 400 despite a consensus view which was well above 1000 rupees for Paytm. So don't go by the consensus view. Paytm is a stock in a sense actually had seen a extraordinary run up, and now that earning downgrades are staring at us, markets take some time to really digest that. And I think at a time when banks are coming back, money is moving into other sectors, maybe some of the fintech and NBFCs could really take a backseat. Look at NBFCs, they started underperforming. Look at fintech, it has started underperforming. So I think that in a sense is also a factor which is not working in favor of Paytm.
Okay, there you have it. Don't go with the consensus. Thanks very much, Anisha, for flagging off those stocks. We'll take a very short break. Be right back. Sanjeev Bhasin joins in. Welcome back. Let's keep it then with some more stocks that are in the spotlight and news to track. And in a major relief to IIFL Securities, the Securities Appellate Tribunal, SAT, has set aside SEBI's suspension order against the company. Do remember it was earlier this year that they had put a stay order. Let's get Ankur, who joins in with all the details. And Ankur, it's certainly a relief coming in for IIFL Securities.
Yes, Securities Appellate Tribunal has set aside SEBI's order barring IIFL Securities from onboarding new clients for 2 years. Remember, there was earlier a direction from SAT on staying SEBI's order, and this was an interim stay, but now a final order has come from Securities Appellate Tribunal. In this order, however, SAT has reduced the penalty to rupees 20 lakhs from earlier imposition of 1 crore. Now, as far as details of this order is concerned, the order has clearly stated that there is no misuse of client funds, and by wrongly considering the non-funded portion of the bank guarantee, that is what the order states. And apart from that, the order also clearly mentioned that whole-time member of SEBI debarring the appellant from taking new clients for 2 years cannot be sustained. The reason is that IIFL Securities failed to change nomenclature of clients' bank accounts under SEBI's 1993 circular, and hence that penalty is imposed. But as far as the wrongdoing from 2016 circular of SEBI is concerned, the order has held that that has not been done by the company, and hence the penalty is reduced as far as the imposition of 2-year ban on onboarding new clients is also revoked now.
Right, and here's Finance Minister Nirmala Sitharaman addressed the Rajya Sabha yesterday, highlighting a robust 13.9% growth in the manufacturing sector during the second quarter. She also emphasized that the stability of the currency, the rupee that is, attributing it to the strong fundamentals of the Indian economy.
The manufacturing sector is also now significantly contributing to the economy. The manufacturing sector has registered the highest growth of 13.9% in quarter 2 of this year. Overall household savings which includes financial and physical savings, grew at 9.2% CAGR between 13-14 and 21-22. That is 8 years. It's grown in that kind of a number. The nominal GDP has grown at CAGR 9.65 during the same period. Hence, the household savings has remained constant. It has not come down. Total demat accounts in India have crossed 13 crores, the highest ever touched in India. Rupee has lost less than 1% of its value against the US dollar this year.
In fact, staying with the macros, India's rural economy is seeing green shoots of recovery, with the festive season contributing a lot. From ITC to Godrej, the bosses of India Inc. are optimistic about the future of inflation, with inflation moderating. However, the global supply chain challenges still continue to impact companies.
Till recently, rural demand was poor, but it seems to be picking up now. I think the Rabi crops are likely to be good, and that would ensure that there is good rural demand. Well, for tomorrow, it may be too early for a reduction, but I'm very hopeful that at the next meeting, there will be a reduction.
You see, it will be a journey in which we will see the complete pickup. I think we are already starting to see some green shoots of recovery. And with passage of time, you see the inflation rates are also becoming more moderate now. So with some more time, I expect that this will pick up. The risk, of course, is the weather events.
Okay, let's discuss what's happening with stocks. And Naresh, yesterday you couldn't take your eyes off from a Tata Power or an IEX for that matter. You think further headroom to go, and can one still buy into these names?
So in terms of both the stocks, Tata Power had been recommending this on the breakout about 270. So the target for the short term is done around this 325, 330 mark. But given that it's a fresh new all-time high, very large volumes, and we've seen this stock consolidate for 2 years. So you want to be waiting for a dip at current levels. The risk reward is not good. Can it ride further? Yes, that's the possibility. It's just that at current levels, it's not a buy. It is a hold for an existing position. IEX, on the other hand, is interesting because that's a fresh breakout. And the stock has also gone through a sideways period of almost 12 to 18 months. I'd seen a lot of gap downs, and now we are back to that 155, 160 mark. Now, that's been a problem zone for the stock for the last 1 year. If it can sustain above the 160 mark, that would be a further indication of a major trend change. So at current levels, IEX looks like a good buy, could actually surprise on the upside and head up to 180 to 200 also in the extreme short term. So at current levels, IEX is a buy.
That's the word on IEX, but let's put the spotlight on other fresh brokerage notes. And REITs, they could be in focus after an amendment to the SEZ rule, which is going to actually help accelerate occupancy. Let's get in Vamakshi, who joins in with what brokerages are saying. Vamakshi?
Well, yes, the government has notified amendment of SEZ rules and allowed floor-wise denotification. This has brought in much needed relief for commercial space and office owners. So definitely, this is a positive development that has come through for most REITs. But let's also get a take from brokerages and let's ascertain what they are saying as well. Investec believes that this amendment should help accelerate occupancy. They believe that this paves way for REITs to potentially open up nearly 3 to 4 million square feet of vacant SEZ area, or nearly 8 to 15% of the completed area. Now keep in mind that Brookfield has more than 15% of its completed area that is vacant, so definitely this could be a very good beneficiary of the amendment. They believe that commercial REITs could offer nearly 12 to 14% plus IRRs over the next 3 years. So positive development is what Investec has highlighted. Morgan Stanley has also said that floor by floor denotification, after it being allowed, they're expecting this SEZ area to be leased faster in the future. So on the back of that, they've actually gone ahead and maintained their overweight call on Brookfield REITs as well as MPC. They believe that the share price is expected to rise relative to the country index over the next 60 days. CLSA has highlighted that the biggest beneficiary of this amendment, like we pointed out earlier, is Brookfield REITs, and other REITs as well as DLF are also beneficiaries for the same. So largely a positive development is what brokerages are saying as well. So on the back of that, keep an eye out on all of these REITs.
All right, certainly keeping them in the spotlight. Thanks for that, Vamakshi. Moving right on, let's take a look at some management meets as well. DM Capital has listed the key takeaways from Concourse management meet. Centrum has spoken about what the highlights were from Bajaj Consumers management meet. Let's get in a roundup of all these highlights. We've got Sharad here with the details. Sharad?
Firstly, we are having Container Corporation, and as per note by DAM Capital, importantly, the company has stated that the DFC connectivity will aid into a double-digit volume growth when it comes to the XM business. Now, in terms of volumes, it's expected that for the XM business, the volumes will range between 10 to 12% growth for both FY24 and FY25. And if you just look at the domestic business, the volumes are expected to grow by more than 20% for FY25. Importantly, the 10% surcharge which was levied by the Indian Railways has been passed on to the trade and the consumers, and the management has also stated that the margins are expected to remain stable going ahead. Also, they'll be adding new terminals. Roughly 16 terminals will be added over the next 3 years. Second stock in focus is Bajaj Consumer Care. As per a note by Centrum, they have stated that they have witnessed a high single-digit growth in the months of October and November, but the volumes have been subdued post-Diwali. Apart from this, also the company is expecting that the inventory buildup will be strong this winter, and the recent launches were there in the products of henna and gulab jal, and also in the coconut oil portfolio. Apart from this, the company has taken price hikes also in large packs, especially between 3 to 5% is the quantum, and the company is expecting that in the medium term, the margins are expected to clock in roughly to the tune of 19%.
Okay, Sharad, we'll leave it at that. Let's welcome on board then Sanjeev Bhasin now on the show. Sanjeev, hi, good morning, and what an excellent call on Tata Power. I mean, one couldn't take our eyes off from the stock yesterday, almost a 12% up there.
Yeah, good morning, Aisha. Tata Power, and you forgot IEX. That has been my pick from 121 when everyone was pessimistic. And I can reiterate the reasons for IEX being an outperformer. Volumes on the power will go up 15-20 times in the next 5 years. So you cannot but be in the biggest exchange platform despite the talk of coupling and so on. So yes, fingers crossed, both of them have been a very, very smart move. And I still maintain that, stay away from the private, the PSUs, lenders get into the private sector. I think Tata Power and IEX have just started a move.
Oh, yes, indeed. I'm sure you're smiling year to year with that call, but I don't know if investors in sugar stocks are smiling at all, because it's been a lot of policy flip-flop. How have you read into all of the news flow, Sanjeev? What's your view on the sugar basket?
So avoid. And I'll give you the parallel of what to get into. Forget about sugar, get into milk, get into cheese. See, if I can take 2 minutes, the biggest industry now growing is dairy industry. We are consuming about 14 lakh crore, which can go to 30 lakh crore by 2030. You've seen the type of brand Amul has created. Youngsters, millennials are very choosy about what they use as milk products, and milk and protein are going hand in hand. Now here is a stock, Parag Milk. This has a market cap of 2,900. It trades at one-time price to book against 3 times sales to EBITDA book, which most others trade. And you're seeing the type of brand they've created. Govardhan Ghee is the second largest ghee brand in the country. Secondly, their milk products are doing extremely well. And like I said, this advent for protein and other products is going to see that this stock is going to be a huge outperformer. Purely on the nutritional FMCG side, their Govardhan Ghee is a big outsider. Star brands for their milk products are doing extremely well. And now, you have the outlook which is changing. And like I said, in this market where rural incomes are rising, ghee, milk and products, dairy products are going to rule the roost. Just look at the ads and the language from Amul. Parag, by the way, is the third largest player pan-India. And I think that this has miles to go. So I can, suggest an early target of maybe 350. But I won't be surprised even if it surpasses that. So aside from sugar, which has left a sour taste, get into cheese, ghee and milk.
switch to dairy, opt out of sugar. That's the word coming in from Sanjeev. In fact, talking about Amul I think was one of the World Cup sponsors as well, right? Kunal, you saw the branding everywhere. At least I noticed that. But anyway, even Parag is one of the stocks, Kunal, that you only identified, right? Day before.
Yes,
Yeah.
it looks very attractive. In fact, it's in the last 2 days, the stock has jumped up more than 10-12% from 219 to 250. In fact, the stock tested yesterday. Even I'll agree over here with Sanjeev that it's a very strong breakout. In fact, the stock in the last 1 year has gone through a very subtle kind of a rally from 60-65 rupees. I think that's where the bottom formed for Parag Milk a year back approximately, towards a point when the stock got into that 150 breakout, which had been a major resistance, and now it's almost like the stock is getting into a free-flowing uptrend mode. Excellent volumes for the stock of the last 1 year. 1 year looks very attractive from a long-term time frame.
Right. But Kunal, what about sugar? Is it time to book out of those names? You think they've topped out with the news flow yesterday?
So generally that's what happens for stock prices, because when these stocks get into sharp corrective phases, for example, yesterday many of the sugar names like Balrampur, Chini, etc., many of the stocks had broken below their 200 moving averages, and this is after staying below those or staying at above those averages for months and quarters on a trot. So this comes as a dent for the stocks over the near term. I would sense that one should not be in a hurry to try and buy the stocks at current levels. Wait out for this downward phase to play out. The volumes have still not been very strong in terms of the breakdown, so which means that hopefully going forward we may expect volumes also to kick in, and if that happens, the selling could aggravate a bit.
Okay, fair enough. And what about your take then, Sanjeev, when it comes to Paytm, the kind of hammering that the stock took, the fact that brokerages as well were pretty negative on a Paytm?
So Aman, the near-term pain may be, very swift, and that is how you've seen almost a 20% fall. But yesterday you saw record volumes. So I think any fall in Paytm is a buying opportunity for longer-term investors. You must realize that yes, this first loss CNFL and GAD, which is a term for co-lending, has seen the NBFCs cut down or reduce their books, which will directly impact the fintechs. But I think banks will go whole hog. This is the opportunity for banks, and Paytm as a brand, as a product is humongous. Now, yes, in the short term, there will be this transition from below 50,000 and, buy now, pay later. But all that is transitory. I think banks will make up for that space. You cannot but use this correction in Paytm to buy. And I'm very, very sure, don't look at the next 2 quarters. Look at the next 2, 5, 10, 20 years, because this is a brand or a fintech which is here to stay. If you see your daily lives now, it cannot persist without Paytm. So I am advocating a buy and accumulate on decline. So do a sip in this stock for the next 4 months. You will be richly rewarded. Plus, I think inflation is on its way down. The RBI caution may have been done with, and sooner rather than later, this personal loans will again gather steam. But the company's business model will take 2 quarters to change.
The UPI, one would argue and say that, okay, it's part of everyone's life, and Paytm in a sense is instrumental in taking this whole UPI culture forward. But UPI is a transaction which is the mainstay for all fintech apps. You don't make money. The spreads are not there.
Correct, Nikunj, and it's the lending which you do with that. So their vendor network and their IT network is extremely the biggest, most powerful, I think, in the world. And arguably, the co-lending which they did at below 50,000 or around that will now start to increase on a pro rata basis. So like I said, they will take about 3 to 6 months to transit. But I think the money will come from maybe banks, and this whole process of advocating co-lending is going to gather more steam over a period of time. Right now, you will have to be balanced on your liability side, on the side which you are getting the money and with which you can get an interest. But like I said, this is a transitory phase. Nikunj, we have to realize that Paytm as a brand is going to make money not on just the transaction, but the co-lending business or the NBFC which it has, which is actually gathering huge momentum on a day-to-day, on a week-to-week, and a month-to-month. So medium term transition, but longer term definitely a buy.
I'm looking at actually we're in the phase of the market where you should say what not to look at. But let's look at stocks where, in a sense, you've seen comeback, which is just eye-popping in this week itself. Apart from banks, you've got OMCs, oil marketing companies. The comeback has been nothing short of just absolutely exponential. The year is 62%, but the month, I think it's a deep swell of more than 30-35%. Nuresh, we saw a big sharp move on Monday, Tuesday, and the follow-up buying post that has not been there. I mean, oil marketing stocks in last 2 days, they pretty much have hugged on to that x-axis, not the y-axis.
So, given the magnitude of the move in the last, say, 1.5 month, a little bit of a pause would be normal. Even a 10% correction from top would not tend the chart's structure as such. So, if you take BPCL, the stock was at 330 to 350. It's gone up to 475. And for the last 3 days, it's a pause. But even if it goes down to 440 odd levels, a 10% correction from top, that would be pretty normal given the extent of the move. So losing out, say, 25-30% of the total rally is pretty normal in an uptrend. So out here, you actually want a dip so that you can again participate. The long-term structure has changed for a lot of these names. For example, IOC has hit a new multi-year high. So IOC used to be close 100, 110 back in 2018-19. So structural breakouts have taken place. It's just that after a 30-40% move, one cannot buy in. So a corrective dip is actually the place you want to get in. So looking at these names to actually get into a correction so that one can participate.
Sanjeev, so you were smiling year to year for Tata Power and IEX. Give us the next Tata Power and IEX.
I wish I knew, but I am putting my money on the city gas distribution companies. I think the pessimism regarding IGL was very much overdone. Look at the gas company. Look at a company like MGL, which has just broken out. And technically and fundamentally, that's one of the best stocks as far as CNG and PNG go. And my other pick is Gujarat Gas. Gujarat Gas is the leading gas trading company in the country. It's the second largest gas distribution transmission company. And it's the largest city gas distribution. And you are aware of how CNG, PNG have gone into every household. So I think that at these prices, and particularly Gujarat company, you are available at maybe 1.5 time price to book or 2 time maximum in an area which is only going to see incremental growth. I think Gujarat Gas can exceed 550 in the slightly longer term. And this is one stock or jewel along with MGL, which is deciding to be uncovered. So I am putting my money on Gujarat Gas. As a disclosure, Gujarat Gas and Parag Milk are in our portfolios. So we have a vested interest. But I can clearly see this city gas distribution, CNG, PNG being a very, very strong uptick. There is a return which is already assured, and now they are their momentum and their volumes are growing day by day. So 550 is coming on this stock and maybe even more.
Okay, good to have you on board. Thanks so much for joining in, Sanjeev, and sharing with us your recommendations and view on the markets. Let's welcome on board Digant Harya as well, who is joining in on the show. Digant, thanks so much for taking time out. Let's get in a take from you first up as to how you're reading into, the movement of some of the large cap stocks, because while the mid and the small caps no doubt have fired up in this recent rally, large caps have sort of been moving slow and steady. What's the view on some of the marquee names within particularly the banking space and the other large caps which are yet to play catch up?
Yeah, good morning. It's good to be back here. See, the bank, the whole banking space, if you look, large caps were the only one which did not participate. And see, the big reason was that there was a large FII selling. Like in the last 1 year, we had more than 1 lakh crore getting sold out of this sector. So despite good results, good outlook, good credit cycle, best ever ROEs, everything was in place for a rally in the banking sector. But stocks like ICICI, Axis, HDFC, they practically did nothing for a very long time. I think now with the election results, that fear is going away, that the FIIs will sit on the sidelines and come back only in the month of June or July. I think that fear is going away, and then everybody is throwing in the towel and saying, okay, now what's the problem with the banking sector? It was just the FII flows. Now that concern is receding. So you can see a good rally in these. We are already seeing that, but yeah, they're still cheap, and if somebody is looking at a year or two, we still have very good, we still have a lot of juice in this sector. So I think large caps have a lot of catch up to do, not just in banking, but across even PSUs, the Reliances of the world. There is a lot of catch up to do, and I think that will happen over a period of next 2-3 months.
Digant, are we reaching that stage where everybody is making a list of what has not gone up and let's start buying it? That is what is happening. All the underdogs, underperformers, they've got up and suddenly they've started running in last 1 month. What has not participated is suddenly now jumping, whether it is OMCs or LIC.
I think so. We are getting into that phase, but again, I think Nikunj, it's a dangerous thing to do because things run up in this euphoria, and if the results do not follow up, we see that there is a slow, steady correction, and the euphoria dies down. So I think we with this just the stocks that have not participated, a lot of them is with a reason. For example, FMCG never participated. All these low-end discretionary items like the Relaxos and Whirlpools of the world never participated in the rally. The chemical stocks never participated. So there was a reason for them not participating, and that is there is no good revenue growth and there is no earnings expansion which is happening. So if those reasons get corrected, I think we can start making a list there as well. But just because BJP has won the elections and the probability of them coming back with a bang in May is extremely high, it does not make sense to buy the stocks where the results will not be there, because this market is in a phase where there's a lot of rotation happening. So if the results don't follow through, I think you're going to be disappointed. You're going to miss the big move that happens in companies where you will see earnings uptick as well.
What are you buying right now?
So Nikunj, we are PSU banks, I think clearly has a lot of juice left. And with this election verdict, chances of FI flow turning back, I think PSUs offer a much better upside just because they are not very, very heavily FI overowned. Your ICICIs and HDFCs of the world are huge companies, very FII overowned, and we still have to depend on a lot of FI flows. But I think the PSU banks is where I think the next leg of move can happen from something like, everybody's close to one-time price to book, somebody 10% lower, 10% higher. I think we can probably settle around 1.5 times price to book for a lot of these good names in the PSU banking space. So that's been a place where, we are placing our bets recently.
It's absolutely incredible, and this is one of the most fascinating stories of India. 2018, PSU banks were recapitalized. 80,000 crore money went. Everyone said, okay, this is money which is needed to keep them alive. I mean, it was like a effort which the government had to do, where they had to put in 80,000 crore across banks, across categories, across size. And even banks like SBI and BOB, they had to be built out. Banks like IDBI, they went under the framework where they were not allowed to lend. I mean, it was such a damage in their balance sheet. But from 2019 onwards, when the cycle has turned, when NPAs have really recovered, fresh capex has started, better lending norms have become, PSU banks are now becoming the darlings. I mean, look at BOI, Bank of India, the QIP. And who would have thought that a QIP, okay, this is the QIP which actually got a response which was 4-5 times more than what actually they wanted to raise. So today PSU banks are reaching a stage where they are actually getting more capital from the markets than they actually wanted. The same banks had to be bailed out by government at a price to book, at a level which was sub price to book. So Digant, if you frankly ask me, I mean, we talk about great corporate turnarounds, great turnarounds here, there, but look at the sector. 2018-19, government had to save them. I mean, they were on ventilator when government had to recapitalize them.
Absolutely, Nikunj. I think, see, the big reason for all of this was corporate lending. So corporate lending, which happened from say 2010 to 2014. That is what really damaged this sector. And then 2014 to 19, we spent up cleaning up this sector. And see, you talked about 80,000 crores of PSU recapitalization. Now we are looking at a situation where SBI and BOB will do an annual profit of 80,000 crores. So yeah, it's a marvelous turnaround. And I think, these turnarounds can never happen without very, very active involvement of the governments and the RBI. So I think full credit to them for this. And we'll see some 2 or 3 good years at least, because there's no big corporate lending which has still happened. And And if there is no phone banking, so to say, or no irrational or illogical corporate lending, I think whatever NPA cycle comes will also not be as bad as we saw in the past. So yeah, it's a different decade for sure for the PSU banks.
What's the outlook when it comes to the listed insurance space? Given the fact that for the month gone by, at least, it's been a little bit weak due to the base effect as well, which perhaps is not entirely unusual. But how are you looking at stocks within this space?
Yeah, so see the in the life insurance and the general insurance space, we always believe that India could grow at 15% CAGR, but last 2 years we have seen that's really not been the case. The growth in this segment is quite irregular, I would say. Good in some quarters, some months, and then it just tapers out. So I think insurance also in India is more of an investment product. And insurance competes with a lot of other investment products, even to some at some levels they compete with mutual funds, they compete with direct stock investments and so on. So I think that they've gone a good consolidation over last 2-3 years. I think it's just that the valuations were too excessive in 2019-20, and we are seeing some bit of saner valuation. So from this point, I think the ones who can execute well, only they are the ones who can actually grow at more than 15%. So you have to have your teams well, you have to have your product, sales team, everything in force. And I think ICICI Prudential is doing a good job there. So I would like to be specific in the sector and not very, very take a general outlook on the whole sector, that the whole sector can do well. This LIC also saw some good excitement because of two things. One is stock markets rallied, and the embedded value of LIC is linked to the stock market gains on the portfolio. And second is they launched this Jeevan Utsav. It's a non-participating product. Like we have discussed this so many times on the channel, that LIC needs to launch some of these new age products where the margins are good. So Jeevan Utsav is that product. If that product can do well, I think a lot of hope will get built up into LIC, that more and more portion of the products will become profitable.
LIC. Hello, sir. Who would have thought LIC will also make a comeback? Let's go to Nuresh. Nuresh, how about a smile today for a change? It's been a good week for the market. Why are you looking so serious today? Why are you looking so serious today?
So that's the general face I have.
No, my friend. You can always laugh and you can always look different.
It's Friday, Naresh. It's time for the weekend. We got Christmas. The markets are doing well. Lots of reasons to smile.
You're wearing red already. See, Christmas mood mein aa gaye ho. You were short in the market by any chance?
No.
So then you should smile.
Long leverage long.
Yeah. So then you should be smiling. Okay. Now, Nuresh. No leg pulling. Tell us LIC.
So LIC is something which I've been recommending also once it started making the first initial move around the 640 mark. The interesting part is not just the price action which has happened over the last 10 sessions. It has been the largest volume change. So the highest volume for the stock after IPO has been in the last 10 sessions. So it is almost 3x to 4x the general volumes. So it's not just a price action which is interesting, but the volume action also. So clearly tells you that the stock is setting up for a move which could sustain, unlike the previous moves over the last 1 year, which fizzled off after a 15% move, the stock fizzled off. So going forward also, any dips closer to 740 odd levels is a buy. I would expect it to actually cross the highs made around IPO. So won't be surprised it goes to 900, 950 levels going forward. So it's a buy on dips, very strong volume. Generally, such volume changes are the start of a trend change.
785 rupees. It's just been a real comeback, real comeback. So Digant, fund management is also about selling. We tend to focus on what you buy, but what are you selling? Where are you making space for new stocks? Where are you saying that, okay, I'm going to take 15, 20, maybe 25% profits off the table?
So I think Nikunj, buying and selling is probably happening in the same sectors because see, the sector themes don't change. For example, real estate stocks have done reasonably well over last 2 months, and in 2 months you get a 30, 40, 50% kind of moves. So these are the pockets where, like where we try to take some money off the table, not entire money off the table, because the whole, the whole setup is good for another few years. So, we just try to churn a little bit here and there that, stocks which have gone up too much and, where the deliveries is yet to happen in terms of numbers, we tend to book some profits, so you, from real estate, maybe you move to building materials or to some housing finance companies. But the point is, you don't let go of the sector, within that, if stocks have, done too well or something, so for example, microfinance, also like Credit Access or Arman, few stocks have really done so well that, despite giving whatever numbers they can in the next 1 or 2 years, you're not going to make large money there. So there are, opportunities which are slightly down the, down the pecking order, not the leaders, but, maybe one rung lower. And you have to shift capital. There is no other choice in this market, Nikunj. So I think buying and selling is probably happening in the same sectors. We are not selling real estate and going into chemicals or going into, say, the whirlpools of the world, because, we still want that the sector should be good and there should be good revenue visibility in the sector.
We've been running a poll on our Twitter handle that where Nifty could be in the run-up to the elections. If history is anything to go by, last 4 elections, markets have always seen a run-up before elections. Now this is the poll. We've got respondents, real-time poll. You can still participate. We'll keep this poll open till this entire weekend, and then Monday we'll revisit it. But 24 hours into this poll, what do we have? Below 21,000, that's more like a minority number. Between 21,000 to 23,000, that's a majority number, 55%. Above 24,000, and that's a decent number. It is a single-digit number. So the opinion poll, again based on Twitter participants, believes that in the run-up to the election, Nifty could be anywhere between 21,000 to 23,000, which means 21,000 is where we are right now. So we could accelerate by another 2,000 points. That seems to be the consensus view. Digant, what's been your experience? I mean, markets, they always tend to rally ahead of elections. That's historical data. But that's history. Do you think history will repeat itself this time?
I think Nikunj, I would say that the probability is not very, very high because, though India and India-centric things are really doing well, the US, Europe, things are not exactly rosy in those large economies. And see, how much ever we may praise or we may like India, the large fund flows still come from those two continents. And, till those fund flows reverse in a very meaningful way, it is difficult for the large cap index to do well. So if you ask me, I think some select large caps and select small caps and mid caps are already at levels where Nifty, where we can say that, okay, it's equivalent to a Nifty level of 25, 26,000. So I think, index definitely looks that, a bottom has been made and, we'll do better from here. But, building in large numbers at the index level does not look like an easy event to us. And I think stock specific, there are so many opportunities that, one can conveniently, not care too much about, what levels the index will be at. And if these FI flows reverse meaningfully, then who's to say that 24,000 will not be breached? But then, looking at US and Europe, looking at the way inflation is getting stickier and stickier in those economies, I think it's difficult that, we may have a large runaway rally when, FIs still don't have, even if they want to allocate to India, they're forced by compulsions in their home countries. And, that is why we are seeing so little commitment by FIs, even after the election results.
Let's see who wins this race. Digant, always great to have you on the show. Thanks, as always, for taking the time out. Let's highlight what's happening in the mid and the small cap universe as well. And let's get in some trading ideas going there. Naresh, what's on your mid cap radar?
So that would be a buy on EIH Limited. The whole hotel sector, one by one, has been showing structural breakouts. We started off with Indian Hotels. Now EIH is the one which is a longer term breakout. Gave that breakout about 220, 230 levels, which was the high back in 2007 and in 2017. And now in the short term, after retesting those 200, 220 band, the stock has started moving up. Yesterday was a good volume and a price uptick. So expecting this to break out in the short term, go towards the 300 mark, stop loss at 238.
Al, what about your stock strategies from mid-caps?
Well, it's one of the stocks which I recommended, a couple of weeks back. CESC, the stock which was at a breakout at closer to 100 to 104 mark, yesterday closed at 120 plus levels. Looks attractive for another 7 to 8% on the upside. So I think 130, 135 could be a potential target range for the stock. Stop loss for this trade 118.
Okay, on that note, let's take a very quick break. When we come back, gear up for the market open. Back with first trades right here in ET now and settling in the red, at least as of now. Although you've seen a meaningful recovery even from that, just a short while back you were trailing in the red and now a recovery. So seems like it's going to be one of those mild start days. But let's tell you what else is happening outside the world of markets. An Israeli offensive in Gaza continues to claim lives. The Palestinian death toll is now over 17,000 since the war began. Israeli military forces have amped up ground as well as air offensive, which is now hampering healthcare, humanitarian aid efforts into Gaza. And Google reportedly deleted 18 spy loan apps with several millions of downloads from Play Store. The lending apps were designed to spy on users by collecting vast amounts of information from their devices. This information is later used to blackmail borrowers or extort them into repaying the sum with high interest amounts. Also, Samir Shah, a long-time TV executive, was selected to be the next chairman of BBC. This is 8 months after a political scandal led to the resignation of the previous chairman, Richard Shah. And back home, the Supreme Court will be delivering its verdict on the abrogation of Article 370 on December 11th. A 5-judge constitution bench had reserved its order on the matter on September 5th. After 16 days of marathon hearings, which started back in August. Remember, Article 370 of the Constitution conferred special status on the erstwhile state of Jammu and Kashmir. Also, the government has issued an alert regarding the common painkiller Meftal. The advisory says that people must take the drug only after consulting a doctor, as it can trigger adverse reactions like the DRESS syndrome. Meftal is commonly used drug for menstrual cramps as well as rheumatoid arthritis and as a usual painkiller as well.
Okay, let's get all the khabar on D Street, and for that, Sharad is ready.
Well, the khabar on the street for Syrma SGS Tech is that the company is expected to onboard a large IT OEM as a client. And do remember, this client, the entire services would be from end-to-end processing status. Now, importantly, this would be coming in for the PCBAs, which is basically making the laptops and assembling them. Apart from this, also the client orders are expected to increase more as more localization pushes there, and of course the PLI scheme for hardware also comes in focus. Also, the street is estimating that the ROC numbers, they are expected to inch up, as well as the impact of subsidies will also kick in the financials. Also, another buzz is also there in the street that the company, which recently formed its semiconductor arm, is in talks with stakeholders to enter into OSAT business, which is outsourced semiconductor assembly and test. So this stock would be in focus.
Right, and after the big fall in Paytm, what's the sentiment now looking like? In fact, before that, let's just revisit what the stock is up to today. Remember, yesterday it cracked double digit, saw a cut of about 20 to 18 odd %. Let's revisit the stock for Paytm. And currently, it seems like there's going to be a bit of a rebound. But let's revisit how is it that investors should be looking at Paytm now?
When the core proposition of your business model or one pillar of your business in a sense looks slightly shaky, then markets will take some time to really digest that move. Now, while Paytm has ticked all the right boxes in terms of committing to cash profitability, they are capital conscious focused, they are not really expanding left, right and center, and they've built up a very formidable, what could be called as a lending business. The challenge with that lending business is that's a business which now is on the regulator's radar, and that's a business where they really want things to slow down. The MTR spreads, what Paytm has actually enjoyed in that business, I think is fantastic. Now, if that business proposition changes, that automatically will lead to earnings downgrade, anywhere between 3 to 15, 3 to about 12%. That's a broad consensus. Now, this is a stock which in a sense is still dominated by institutional investors. It's a stock which is still very expensive. And when you typically see that there is going to be reorientation for next couple of quarters, then the earning estimates will get slashed. So it's a high beta stock. It's a stock which had seen a deep swell from levels of 500 rupees to levels of about 900 rupees. Yesterday, a lot of stock was marked as delivery. So even though you may say that, okay, the consensus price target is somewhere close to 800, but in the decline also for Paytm, Anisha, brokerages never slashed their targets vehemently, excepting Macquarie. So Paytm actually fell from 2000 to levels of 400 despite a consensus view which was well above 1000 rupees for Paytm. So don't go by the consensus view. Paytm is a stock in a sense actually had seen a extraordinary run up, and now that earning downgrades are staring at us, markets will take some time to really digest that. And I think at a time when banks are coming back, money is moving into other sectors, maybe some of the fintech and NBFCs could really take a backseat. Look at NBFCs, they started underperforming. Look at fintech, it has started underperforming. So I think that in a sense is also a factor which is not working in favor of Paytm.
Okay, let's get you some index strategies as well in consolidation mode since yesterday. Looking at the pre-open rates, it seems like it's going to be another quiet start. Of course, the RBI address as well is going to be a key trigger for markets, I guess, going forward, but it's a hold really from both Kunal as well as Naresh. What about the Nifty bank call then? The Moodle meter, of course, is a hold here. For the bank as well, it's a consensus there too. A hold from both Kunal Bothra as well as Naresh Mirani.
Alright guys, it comes back to that same point again, that how should we read into Thursday's price action. So Kunal, it would be too myopic if one is making a view on Thursday's price action, right? A view based on yesterday's price action.
Yeah, I think yesterday, and even if you include day before's price action, it's been absolutely range bound for both the indices. Nifty was, I think it's still taking its own time to try and consolidate and break past about 21,000 mark. And I think it's a natural course of action, Nikunj, because at round strikes for both the indices, Nifty as well as Bank Nifty, there's bound to be some tussle between the bulls and the bears, specifically when the option writers come into play, and especially at a point when the index has rallied some 1,000 to 1,500 points on the Nifty, especially in the last few trading sessions. So I consider this as a pause for the index. Hopefully, once the large cap stocks they try to get back their mojo, I would believe that we could be getting into a breakout back again on the indices.
Naresh, would you apply the same same approach for Bank Nifty also?
So Bank Nifty, I would be looking at, instead of trading the Bank Nifty at current levels, the rest of the banks still look good. So you can continue to hold on to the Bank Nifty positions, but something like a SBI and ICICI, which have gone sideways for a period of time, could actually give a fillip. It's just that SBI does not have such a large weight on the Bank Nifty. So overall, want to buy on dips, but at current levels, risk reward is not great. So hold on to the index. Bank Nifty looks pretty exciting in terms of a medium-term structure.
Well, the one story which is clearly playing out in the market, of course, continues to be power. That was the case yesterday as well. And Kunal, quite a bit of shift and churn happening within the power sector as well, right? I mean, PFC, REC, of course, have been the year-to-date best performers, I think. From there now, money moving into the likes of Tata Power, etc.
Well, yeah, I think it was a very strong breakout for Tata Power, specifically PFC, REC, yes, in the last few trading sessions. There is a definite bit of a halt for these stocks, and that comes naturally with the extreme overbought nature of indicators these stocks are. So, we can expect maybe few weeks or maybe few days of consolidation for these names. But I think Tata Power is something very interesting. Stock managed to break past about the 300 hurdle, which has been a major resistance. And what we are talking of is a 2-year, 3-year range action for Tata Power, and the stock has managed to confirm a breakout of that kind of a time frame range for itself. So that indicates that this could not be a short-lived momentum, but this could be a very strong trend in the making.
If I say go short, how would you react? No, big no, or a very big no?
Not looking at it right now.
Nuresh, if I say go short, should one go short, how would you react?
There's no need to do that. You don't need to be adventurous.
Well, no need to be adventurous. 90 seconds to go. I think there is no need to be adventurous because markets are likely to be just flat. But just been a week of records. Record uptick for the mid-cap index. Record uptick for the bank nifty. Record uptick for the nifty. Record drop in the US bond yield. Record surge in Bitcoin. Just been so many records which have got smashed before the year end. Nifty is up from December 3%. Mid-cap index up 2.3%. Small cap index 2.3%, and the Sensex is up 3%. Sensex and Nifty obviously would be at par with each other. But it's been a 1,000-point Nifty rally. I mean, last couple of days. And you've seen, I've seen linear moves in my life. I've seen straight line gains in my life. But what's happened post-September, post-October, I think is something special. Not for India, but for the world. Where yields have corrected, Bitcoin has gone higher, gold has gone higher, and equities have rallied. So normally, all asset classes do not move up in a synchronized manner. I mean, asset classes are like, you call it asset allocation because all assets, if they're not supposed to move together. So what have you seen? Decline in yields, bond yields, uptick in gold, which is a hedge, surge in Bitcoin, which is indicator of risk, and money coming back to emerging markets. So, interesting times, right? First rates, and the first rates are now coming any second, and the first rates any second on your screen, and there you go. It is a full house again. It's not a very strong start for benchmark indices, but that really is not the story. The story would be individual stocks once again. The story could really be some small and mid-cap stocks once again. Okay, now let me just first talk about the real star today, and I think Anisha spoke about it. It is Orchid Pharma. Hello. Orchid Pharma is surging on very volumes. I think Orchid Pharma has already surged by 14-15%. Now let's look at another stock where I can see a block deal. That is 5-star. I think the block deal has been done at 7:32. I need to use the screen. Somebody is taking it from outside, so please give it back. Then it's 5-star, which has seen a block deal already. Reliance Communication. Now this is like the real tail-ender who's jumping now. 11% higher. Tata Power, the surge and the jump continues by about 1%, and Z is on a 5th gear. My colleague Ankur Mishra has been reporting that looks like there could be a final agreement which could happen between Sony and between the Goenka family on who could be the next CEO for the combined entity. That is something where clarity is expected later this week. But on your screen, Z trending up on very strong volumes. And then where is Sugar, Aisha? I mean, that is one space where yes, no continues.
Yeah, absolutely. So let's just revisit those names. Seeing some more correction now, but Rampur Chini at 400 level, and I think similar is the price trend across the cement sugar sector. Dhampur, Awadh Sugar, Renuka, they're all trailing in the red. What is Zomato up to? That 1% block deal has just happened. The floor price was set at 125. It seems that AVF growth was looking to sell into Zomato. 1.6% higher for Zomato. 123 is where that stock is. There was also Ircon, which just saw a block deal. Remember, there was that OFS which was going to come into the market, about 0.7% higher for that stock. There was also supposed to be a block deal on 5-star. That is what the reports were indicating, wherein Matrix as well as TPG Asia were looking to sell a sizable stake in 5-star business, 3.25% lower for that stock. And then Titagarh Rail as well, which has launched its QIP. They're looking to raise about 700 odd crore rupees. That stock holds higher by about almost 1% as we speak right now. So that's pretty much it. Let's just revisit the buzzers from yesterday. Tata Power, IEX. Those stocks will just come up for you on your screens. There was also decent action on a Concord, on an MGL, etc. as well. IEX, of course, is pausing a little bit, 0.5% lower as we speak right now. and Concord is holding up higher by about 1% or so. Let's see whether that adjustment in Bharti after the Warburg stake sale is done with and whether that stock has resurrected itself. Little bit of a lukewarm move. 996 is where that stock is. Kunal, once again, a very flat start, but any individual names one can trade?
Well, yeah, I think HDFC Bank is something which looks attractive at current levels. The stock has consolidated quite a bit, and I think at current levels also looks attractive for a fresh trade.
Okay, Naresh, what about your stock ideas?
So that would be a buy on IGL, which can be a good bounce back trade here. Has made a base around that 400 mark. Could see a move towards 440 in the short to medium term.